the market is anxious, right? I'm starting the live stream, so if anyone that has subscribed to YouTube, they can watch it. But the market is anxious, right? Because there's a lot going on. Because everyone knows that you got. Oh, sorry, 1 second. Everyone knows that we need a correction, right? And so when that happens, it's not just us. If we have that feeling at the retail investor, imagine people, big money, right? So they're just waiting, and I'm seeing a lot of bearish flow coming in for the small caps, the IWM. I posted that multiple times.
Yeah.
I mean, these guys are banking on this consolidation, right? They see a top, they short that sucker, and then they ride that, and then same thing here. The the bearish flow that I saw yesterday. I mean, look at it. They bought it here at this resistance, right? This resistance level. So they bought. I think I saw it come in yesterday. So we may pull back again. And so there's definitely that sentiment of hesitation. So, but the problem is, we as the retail investor, smaller accounts compared to billions of dollars, we have to be careful and that, because these guys, they have so much money, they can buy puts that expire in December, and millions of dollars, right? And so they can wait. They're okay if it goes up a little bit, because they can always average down. Right? Because they know that the market long term, they're bearish on the market long term, and so they're going to buy puts that IWM puts millions of dollars, and they expired on December. Like, oh, we rallied a little bit, it's okay, I'll just average down and buy up some for January, right? And so, but we can't do that, right? We, as a retail investor, we can't just like, oh, I'm gonna average down a little bit more, I'm gonna put another $1 million. We can't do that, right? Yeah. And so. Right. Anyway, that's something to keep in mind. All right, so let me pull up some names here. So Starbucks is one ticker that someone from our server mentioned it.
JD.
So JD, that's right. JD, man, he's doing really well. He's in our class, and obviously we're not taking the credit for that. He was a good trader before he came to our class, but his analysis is going great. I like it. It's very detailed, and so he found this. This is to me. This is, especially in this market when you have a ticker that's it's been correcting for a while. I love this setup because the sellers are being exhausted. Whenever there's a correction like this, what you're watching is for volume to decrease, right? Because that's when the sellers are done. The sellers are finished, and now bullet buyers are going to come in. Yeah, you can use the EMAs, use indicators, but really what you're looking at is these levels of support, these demand zones, like in this case. So that's why I like this setup, because it's easy to see the reversal by seeing a decrease in volume, and then all of a sudden an increase in volume as we're coming out of the bottom. So this is one to watch. I'm going to be looking at entering the 117 call, most likely later in September. The premiums are super cheap, extremely cheap, and so there's definitely one to. I think I saw a 120 call for the end of September for like 50 cents for the 120 call, and that's definitely doable. In 2 months we can definitely see that 120. So definitely one to watch here. Not really much. You got to go heavy, and you got to go closer at the money, right? So if you're gonna day trade, you're gonna buy, for example, 116 call, buy a couple of contracts, and then go heavy, right? Or you can buy 120 call 2 to 3 months out and just let it sit. So, so there's that. Starbucks.
See, if I was more confident, I would do that.
Yeah, I know, and that's what I'm saying. Like it's about confidence, right? And there are times that I see something, the chart is there, the flow is there, and I go heavy, and it turns out great because I've developed, slowly developed that confidence. And there are times that I'm really not as confident on certain trades, and I just go one contract, like, oof, the market's kind of shady, something's gonna happen, and I just go in one contract when I could have gone a little bit more. But that's why the amount of contracts, the expiration date, and the out of the money, the strike, it reflects not only your anticipation of the price movement, but also your confidence, right? And so
True.
when you see someone buying multiple contracts, they obviously either have a big account, right, or they have a lot of confidence in the ticker. And so, but you never know what that is. So you got to be careful when you see someone, buy more than one contract. So there's Starbucks. CRM. I don't think I'm going to play CRM. Mainly, they just reported earnings, but they killed it, and they've killed it for the last 2 years that they reported. But obviously the IV is a little bit high, and so it will broke out of this channel. See again, here's that pattern. We break out, we come and retest this breakout level, and then we rally again. And so I'm gonna see where that goes. If the overall market pulls back, obviously we're gonna pull back. This is where we can do spreads. So actually, I want to show you guys something. Crystal, I know you're there. You're probably listening. I saw you come in, so welcome. Let's see if I can.
Thank you. Yeah, I'm just
So let's see the option strat, I think. So this is actually pretty cool. I just found that yesterday. I was looking like, how can I show spreads a little bit more? Like, how can I explain that better? So we're going to talk about this. Let's see. You can create a spread here. So for example, I was messing with this one. So if you're going to trade a spread before earnings, you can go to this website and then say, okay, I'm going to make a, I'm a bullish, right? But the IV is so high, so I'm going to do a spread. I'm going to buy a call and then sell a call at different strike price. So for example, September 3rd, I'm going to, here it's, let's see. I'm buying a call, then I'm gonna add an option, and I'm gonna sell a call. So this is a spread. Usually, what it is you buy a call closer to the money, and then you sell a call out of the money. When you sell a call, it's going to decrease the amount of money that you pay up front, right? And so you're decreasing your risk. You're decreasing your reward, but also decreasing the amount that you put in. So anyways, we'll talk about the spreads in our class.
I've never done that before.
Yeah, it's an advanced, it's from our advanced section. So we'll talk about that. This is really good when the IV is so high that you're selling a call to decrease the risk from IV coming down. And IV crush. This is IV crush protection, I guess you would call it. So, but your profit is limited in this case. Okay, so every time because if you're selling a call now, if it goes up, it's like there's a cap. There's a cap. Here's your maximum loss, right? And so you got to move that to find out what the maximum profit. So anyways, we'll talk about that. Don't worry about that. But this is in this case, here's a good time to do it when it has rallied so much, the IV is so high, but you're still expecting a move. So those spreads are really good for earnings, and we'll talk about that in our class. But okay, I mentioned D-Dog. I have this nice little formation here. I love what it's doing. This is great. I think we still have, just looking at this, we have a little bit more, maybe more, another day of consolidation. So we'll see how that goes. But you want to see a contraction in price in this case, right? You want to see the market, just the ticker slowly consolidating, because that just means that sellers are done selling, buyers are done buying, and we're coming to the volatility is decreasing, right? And now we're ready to move. We're ready to go wherever the market wants to take us, okay? And so watch for DDOG. We could break down if the market is a little bit bearish. We could go break down. We can move, to the downside, or we can rally up, right? It's going to be harder for this one to go up a little bit more, especially because we just had this big move. And so, but if the overall market is bullish, we might continue and keep going. So, but this is a neutral setup. This ascending triangle, and so we could break down, and then if it does break down, we could always use these previous supports as our profit targets right here. And yeah, here will be the next one, right? Our previous supports can be used as our profit targets. Okay. So add DDOG to your list. Uber, a little cheaper premiums. We talked about this one. Okay. Again, we break out and we're retesting this. We're retesting that breakout level. We might even come down a little bit more, because really the breakout level was more. Right, the breakout level was more like right here. It doesn't have to be perfect, right? But you're looking at the areas, like the area that everyone was watching, right? So it's breakout, it's going to come, but it looks like this might have been the zone. So if we break above this 42.11, which is the previous high, we can rally to the next level, to the next zone of the next supply zone. In this case, I put it here because that's really the area where we have a lot of consolidation. So a lot of candles in that zone. So I'm saying that is where the next supply zone is. So there is so the probability of this rallying to 43 above this 42.11, it's higher going here than it is here. All right. So at Uber, mentioned Z. I said I wasn't gonna swing a position, but I decided to go with this one just because it's low risk. We're at the bottom. Remember, it's a housing market. Look at that. What is this pattern? Beautiful, beautiful pattern. This head and shoulder. This is like someone cut like a mirror, just made a copy and paste on the other side. This is beautiful. So we're at the bottom. I think we're going to rally a little bit, go to this zone right here. I'm going to draw it right here. I think that's probably where we're going to move. Move to 103, 104. So definitely watching for that one above this level, this 105, that's where it was. Actually, it was rejected. Well, like right there. Okay, I love the setups a lot when we're coming out of we have rallies. So what I've seen happen a lot, and Fastly did the same. That's why I called it, when we bounce and then we form kind of like a backwards check mark. It's hard to describe. Let me see if I can draw it here. Draw. This setup goes here, and it tests. It's almost like a cup and handle, right? And it does this, and all of a sudden, boom, makes this move. Okay. I'm going to show you what Fastly did. It's hard to see here that it really did that. You got to move in. But again, it dropped down, it consolidated, and I was ready because I've seen that happen. I was ready for a move. That's why we decided to swing that. So it was just a matter, and it moved. It moved $1, almost $2. So when you see a setup like that, when it's kind of like a V, and then there's potential upside, this is a good setup. So okay, BA, I mentioned BA. Here, I don't know what, it's hard to tell what we're going to do here because on the weekly, I really like the weekly. Because I mentioned, I said that like 1, 2, 3, we're going to bounce here, and it did bounce, but it's struggling to move. So we can still rally a little bit more and follow the same pattern of bounce, touch support, bounce, touch support, bounce, touch support, maybe. So definitely add that to your list for Boeing. Boeing's a little bit tricky. It's, you got to almost get in and out, and it's a rough one to trade. So I would suggest you study first. But look, again, we're following the same pattern, right? So drop, we're consolidating, right? And it can make a move to the upside, right? So now in this case, we would add, here's our alert. And I'm just gonna add it here, right? If it goes above 22.69, I'm gonna enter, and I already have my zones. I already have my zones ready to go. So if it does 222.69, I'm gonna be getting a 225 call because that's my projected target. Okay, AMD, I think that's my last one. AMD, obviously we were overextended, it pulled back, it's consolidating. It wants to do this in this big cup. Oops, that is not. It wants to do this nice big cup. So, and now we're consolidating here. I called it out this morning. The pre-market was hot. I'm sorry, yesterday morning, and I played that AMD. I saw that the pre-market. This is one good way to know if you want to scalp at the open, is by looking at the action at the pre-market. Especially if it's doing this. So I saw that there's a lot of buy-in interest, and I knew that there's a big move coming, and so I was just waiting for this break. I used my pre-market high as my entry, and in this case 108. I think that's why I said 108.5. I think that's what I said. I can't remember. And then it rallied, and then we took profits. But look at where it rejected. I already have my zones ready, my levels of supply, and that's where it rejected, which is the previous couple of days. This is zone, it rejected and it came back, right? So there's obviously a lot of sellers up here just waiting. So. All right, that's it. That's all I had in terms of tickers that I'm watching, and we did touch a lot of things. I touched about the overall market sentiment. It's always good to always look at your tickers, but it's always good to look at the overall market sentiment to see what we're gonna do. Okay, I may not trade today very much just because of that for some reason, the volatility. If you don't feel comfortable trading when there's high volatility, don't do it. Just wait. Let other people trade that volatility. If you don't have to trade it. And so unless you feel very confident in a certain trade. But I'm gonna wait. I'm gonna take it easy today. I'm gonna wait for the Fed to stop speaking, unless he says something crazy, and then SPY starts dumping, and then I will trade that momentum, and I will just scalp it. So. All right. You guys have any other any tickers that you want me to pull up here? We can talk about it.
I don't. I don't. If Crystal does. Sorry.
No, I don't.
Okay. Awesome. Well, thank you for joining, and even just to kind of chat this early.
Are we doing Taco Thursdays now?
We were going to do Taco Tuesdays, but the taco shop was closed.
The taco truck was closed.
The taco truck was closed. Yeah, we ran out of tortillas. I think we're having technical issues on Tuesday. And they're like, oh, let's move to Wednesday. And then we're having Wi-Fi issues. And so anyway, we're gonna go back to our regular programming next week. And so we'll do it next Tuesday. Try to keep it that way. Even if it's, I mean, if it's just us, four, just Angie and us four, that's fine. If you guys are gonna come, we'll make it happen. I'm okay if only one person shows up. It doesn't matter, because it also helps me too. Kind of speak things out. So it's great. I love it.
Well, you know me. I come to everything. So
I can always count on you. I can always count on you. All righty. Well, thank you both. Thank you, Krista, Rachel. You guys are awesome. We'll see you at the chat. Looks like Angie already posted her watch list for the day. Just looking at Apple, Microsoft, Fubo, Twitter, and Space. And also she has her spy levels. So definitely watch for those spy levels. She's really good at that. You can make a living off of just trading spy because it's so liquid, and you just get in and out. And so if everything fails, you can always trade spy. So.
I'm trying.
All right. You guys have a wonderful day. We'll see you at the chat. I'll post some of these plays and the watch list channel. And let's make some money.
All right. Thank you.
Thank
Okay.
you.
See ya. Bye.
Bye.
See y'all.
Bye.